Hi guys. Amazing. Oh my goodness. I'm so sorry. We're really sorry for the technical difficulties. We are back. Firstly, we just want to apologize for yesterday. I don't know what's been going on with everything, but yeah, tech's just not been on my side this week. But thank you so much for you guys who have waited. I'm going to share my screen now so then we can go through what I wanted to go through um, with you guys yesterday. Okay, let's have a little look. What a nightmare. How's everyone's week been though? Hopefully better than my internet. Okay, let's get going. But yes, I am all well, back to my normal self. And yeah, let's hope that the internet is on our side. I literally spent like an hour and a half yesterday on my Wi-Fi people, on the phone to my Wi-Fi people, to try and figure out why the internet was so bad. But okay, let's have a little look here. We're gonna have a look at. We're gonna make our way down. So let's have a look at gold first. You guys know I like to trade gold. Today's been well, I haven't traded on this account today. I literally started this account this week, but my first trade didn't go too well, which is fine because losses are part of our wins. We got someone was asking me the other day about how I deal with the stress of losses or just losses in general. And one of the biggest things that I would say is actually to redefine what a loss means to you, because a loss to me isn't a negative thing. It's just a lesson. There's always a lesson to be learned. Um, but asking about last Friday, better forget that. What do you mean, pro trader? To say water. Not what why do you need me to say water? Thank you so much, Prince. That's amazing, Juliet, to hear that you've had a good week. Okay, let's have a look at gold and see what's going on. So on the 4 hour, we're still very bullish, but we do have a lot of these very steep trend lines that we could be looking to break to, actually give us a little bit of a pullback, because I mean, gold on the 4 hour just can extend a lot, but today we have been moving down. So the last low really on the 4 hour is all the way down here. So if you're trading market structure and you want to trade off the 4 hour, then you're basically choosing your bias based on the highs and the lows. Are we making higher highs and higher lows, or are we making lower lows and lower highs? The crypto crash night, I meant last Friday, was a nightmare. Just recovered. Oh, do you trade crypto? I'm not really into crypto. So yeah, just looking at gold right now, we've got my kind of bias for the 4 hour is that we could actually still be looking for buys, but because I also like to trade trend lines, we have just been moving very steep upwards, so we can still be looking for buys basically all the way till down here, which could make sense if we're looking to break this trend line, which is more on the 1 hour, as there's a little bit more structure on the 1 hour. So I actually had this drawn up like this because of the 1 hour. I'm just going to highlight this so it's a different color. But yeah, so if we can break through, now looks like we're slowly creating a counter trend line, like this. So the counter trend line is your safety line. So why is gold pumping so much? So gold, the thing is, interest rates got cut. So if you keep your money in the bank, inflation, it just doesn't make sense, because inflation is just moving rapidly fast. Interest rates are low. So if you've got money and if you want to invest your money, the worst thing you can do is keep it in the bank. So a lot of investors will put it into gold, they'll put it into the stock market, they'll put it into other things. But obviously, we have seen a big crash in crypto, in the stock market, everything. But gold is known as the safe haven. And we're having a bit of a pullback now, but like I said, this is just the 1 hour. We've just been so aggressively moving upwards that even if we actually do get a little bit of a pullback now, we're still technically bullish because we got these trend lines down here. So if I just go back to the 4 hour quickly. We're just having a bit of a pullback now. It's not too much of a surprise, but it'll be interesting to see if we do break this 1 hour, which is also a bit of a 4 hour. So for me, I'd probably want to see the yeah, definitely the 1 hour closure. Can you guys hear me? You guys can hear me. I come back to your stream again and again as I also believe in simple tools like trend lines as me, simple things done consistently. Yeah, 100%. But yes, simplicity doesn't sell because it doesn't sound as I guess smart and cool and technical. Some people literally like to sound more technical than just keeping it simple. For me, I'm a very simple trader, otherwise I just get confused. So I like to use trend lines, I like to use market structure. A lot of people like to say trend lines are just not they're not safe enough. You're just, every time you enter a trade because of a breakout or something, a lot of the time you're going to get faked out. But this is why you need to know how to actually trade using trend lines, because for me there's more like just because we break to the other side, we've got to tick off some other things as well. Because we did have a bit of a steeper trend line like this, which I wouldn't have been able to enter. So there's your breakout here. And for me, it's a little bit too much of a big risk because our counter trend line, which is over here, so we're quite far away from it. And also we've got another trend line here. So there's multiple things that I actually still take into consideration, even though I use trend lines. I would say that the market structure is one of the key points to my strategy and such an important factor of trading. No voice. Um can everyone hear me? You guys are saying that there's no volume. Guys, can you all hear me? Because some people are saying that you can't hear me. Okay, you can hear me now. Perfect. I don't know what happened there. Because I got my microphone plugged in. It should all be fine. Thank you so much for tuning in, though, guys. We are going to run over today because we started so late. Um, but yeah, so I like to keep things as simple as possible. So let me know in the comments, guys, what strategy you trade. I want to show you exactly kind of like my breakdown. So, like I said, right now for gold, you could technically trade off if you're trading off the 1 hour. You're technically looking for sales. But if you're trading off the 4 hour, you wouldn't be doing anything because you're still actually looking for buys. So it really does depend. If you're trading market structure, what time frame are you trading the market structure? And we still use the lower time frames as our entry point. So with market structure, you also got to understand where we are in at the market structure. So not just are we going up, are we going down, but are we in the extent? So when we're going up, for example, this is the extension, this is the pullback, this is the extension, and now we've obviously broken this low. So currently, until a candle prints green, we're currently in an extension. So we got to ask ourselves, where are we in market structure? So the last red candle broke past this low, giving us on the 1 hour that we're potentially looking for sales. But if we are in a downtrend, would you rather be trading in the extension like what we're in right now, or after we've had the pullback? So for me, if I'm looking for sales, we want to be entering at a higher price, and once that that push up is done, so when we actually start coming back down again, we can then get in on a continuation trade of that sell. But it's better to take a sell up here rather than down here on that extension. So right now, what we want to be doing is waiting for that low to be created. And for me, a low is pretty much, we're going to need a really decent green candle. So, if it prints like this for me will show me that this is potentially our new low, which is a lower low. So then what I'm waiting for is a pullback. So then we want to basically wait for a high to be created. So maybe, when we get to around this area, we're printing green, and then we print back red, and then we start moving back to red again. And that's when we can start looking for our entry on the lower time frame. But until that actually happens, we actually can't do anything. So it does take a bit of patience. And if you're doing off the 4 hour, can't do it, you definitely can't do anything because the 1 hour is going against the 4 hour. The 1 hour is telling you that we're still bullish, but the 4 hour, but the 1 hour is telling us that we're bearish. So we would not be able to trade the 4 hour bias until the 1 hour also is back to being bullish. Hopefully that makes sense. I know a lot of people get really confused with like the top down analysis, but the more you hear it, the more you go over it, it does start to make sense. You just have to really understand, that the different time frames are fractal, and get really, really certain and know exactly what it is that you are trading. So, like I said, market structure is like the underlying, foundation of everything that I trade. So, I need to understand market structure. That's the first thing. But I use trend lines as a tool to also find my entry points. So, like I said, for me, we had like this really steep trend line here on the 1 hour. It gave us data since yesterday. When it broke through, I couldn't take this trade because we've broken through straight down to another trend line. So this becomes invalid for me. And we're also if we just took a sell down here, if you understand market structure, you know that you're taking a trade in the extension and not the pullback. So ideally, if this is our counter trend line, this is our safety line, we want to be entering a sell when it's closer to here, because then you can have a really tight stop loss. But for me, um that's not what I'm trading today. So let's have a little look at the other model, because basically I use trend lines as an entry form, or I can use pure market structure. Is it just gonna read some of your comments, guys. Makes sense. As direct sell entry here would, yes, exactly. We're looking for that retracement basically. And you know, a lot of people are like, but how do we know when that pullback is over? The way that I do it is I just use the different time frames to tell me the story of what's happening. If we are, you know, right now on gold, we're looking at the retracement. If we drop down to the 15-minute, right now, you know, it's kind of consolidating. So it's not, we don't want to look at any past data. When you start dropping down, you're only going to look at data moving forward. And this is what trips a lot of people up when they're using multi-time frame analysis. I actually think you know, it's not as complicated as people think, but they get confused because they start looking at all of this old structure and they're like, yeah, that's telling me that it is bearish, so then they're going to enter their trade. But then we don't know, if none of this existed here and you just looked at this section here, what would be your analysis? It's not really going up or down, it's just consolidating. So we don't want to enter until the 15-minute has given new bearish structure, telling you that that kind of retracement, that pullback, whatever you want to call it, is over. So we don't want to be involved in consolidation. This, you know, this trend line could be definitely a good area to set an alert for. Um, okay. Okay, so using trend lines, how often do you get setups a week? So it massively depends on what time frame you want to trade, because I personally like to trade nearly every day. I'm definitely a day trader. I've moved away from scalping. I did for a while, for the last couple months, really want to be a swing trader. But in all honesty, swing trader just isn't really for me at this moment in time. And that's what I want to talk to you guys about today, about your trade plan and why it's actually so important, and how we're going to really tailor it to you. So I'm going to tell you what's been going on with me the last couple months. But yeah, someone wants me to look at a currency pair. So with currency pairs, I'm finding that I'm using basically liquidity pools as oh, oh wait, we do have it. Let's have a look. Let's have a little look. I'm using my liquidity pools as areas of interest. So what I mean by this is, I mean, there's loads of different places that you could class as like your liquidity. But one of the ways that I really like to use liquidity is using the highs and the lows of a session. So let's have a little look. I'm going to mark up our Asia highs and lows from last night. So I'm pretty sure if we horizontal, so I'm just looking at the candlesticks. So I think that would have been your high. Yeah, and this is your lows. So during, wait, where are we? Why is this saying, oh, it's I'm getting confused because it's I know well, I'm in the UK right now, and this is telling me that this is the 12 o'clock candle, but it's 1 o'clock here. So yeah, I mean, this isn't a really good example, to be honest, because I'll show you the highs and the lows of London session, and it looked like it just consolidated quite a lot. So let's have a little look here. Think that's your low, and then be once this candle prints basically. But New York session has already started. But yeah, let's just say that this candle is closed right now. Go from weekly down. Okay, trading shop be simple. Point of interest, 15-minute is actually attracting the buyers, in my opinion. It's going to fall very hard. So Jabaya, so what I was just going through on gold was that there's definitely argument on both sides. On the 4 hour, my if I was choosing to trade market structure on the 4 hour, I wouldn't be doing anything until the time frames are lining up with being bullish, because I'd still be looking for my buys. But if you're going to trade off the 1 hour, you can then basically trade the bias of that, which is bearish. And because it's such a big range, we could see it pull back before it then goes back up. So it just depends what time frame market structure you want to trade, if that's the way that you're trading. But yeah, I'm just showing you guys here how, because I've actually been looking at some currencies, not this currency in particular, but I've been trading Euro USD and GBP USD. So yeah, I mean, there wouldn't have really been a setup here really, because it didn't really move a lot. It's just depends as well if this candle closes. But yeah, we've got our trying to work out, because on trading view you can actually use an indicator that marks up your Asia highs and the lows. So yeah, so it would be around here. That would be your low, I think. So that's 7. Yeah, so maybe, yeah, so that was the last candle here of Asia, and then that's your London lows. So let me show you. When I trade currencies, I've been finding that this really works. So again, the basis of the strategy is all the same thing. Our entry point is literally all the same thing. It's just with this way, if you're trading liquidity pools, you're just choosing an area that you feel like there's buyers and sellers, and you're going to just react when you get there. So this first line here is the Asia lows. So we're going to wait until price basically comes to this area and tells us how it's going to react, and that's going to determine our bias. So if we have a look here, we literally this first candle of London basically taps in, it closes, but it doesn't break it, and then it has this big push. So this is telling me I'm going to now be looking for buys. So as a day trader, I'm happy to trade like this, off the 1 hour. We've tapped into an area where, here potentially we're going to have some buyers, and what this showed me is that we still had buying power rather than selling power, because we actually didn't break through the Asia lows. So once this candle closes, which would have been here, this is now where I would drop down to the 15-minute. So you would have seen here this close up here, then you would have seen this on the 15-minute, new structure being created, and we're waiting for this high to be broken to tell us that we are still going bullish. We wait for this 15-minute candle to break, and the way I really like to enter my positions on the area that we broke out from. So there would be your entry, and then your stop loss would be just below the last lows. And then for me personally, I like to aim for a 1 to 2, and then I will just go break even at 1 to 1. So you can see there that played out really well. So it's still the same concept of using the lower time frames as our entry point and understanding market structure, reading market structure, but it's just that starting point is slightly different. We've got market structure if you want to purely just trade, that market structure, or we have trendline breakouts, which is also giving us our indication what our bias is. And then we also have liquidity pools, which, like I said, the way that I use liquidity pools is the highs and the lows of a session. So right now, this could potentially be it's difficult because I don't know what time to go off. If that is the London session highs, so London session ended an hour ago. Technically, if this candle breaks above, we're still gonna be bullish on this currency pair. Okay, guys, I'm gonna just read some of your messages now. 15 minutes is like, okay, cool, I read that. Go from weekly to down. Yep, for me, I like starting from the daily. I don't personally do the weekly, but everyone, it's each to their own. What are the other confirmatory things you add to trend lines to improve your trades? Okay, cool. Let me show you guys. Let's have a look at NAS. Let's have a little look at NAS so then I can talk you guys through this. Who asked that question? Pro Trader. Cool. Yeah, because a lot of people ask me this because some people are really, really skeptical about trend lines. They feel like it doesn't work. But I feel like that's because they don't have enough. They have nothing more than just a trend line. So for example, we had that big crash. I wouldn't have just been entering a sell basically. So let's start. We're starting on the daily. So this is what I would do when I trade trend lines. We're going to just try and start from that lowest point, and I'm going to show you what's going to keep me safe. So this is kind of our lowest point down here. Okay, so let's start the lowest point, and I'm using the lowest point of the candles as well. So I'm doing the wicks. Originally, this would have been the trend line. I have my daily as blue so I don't get confused. So, some people would be saying, oh, am I going to be taking a sell? The reason why I'm not going to be taking a sell here is because there is no potential counter. Well, actually, we could say there is a counter trend line coming from up here. So it would originally have been there, but let's just put it here for a second. Okay, so for me, these candles are not a break. It's very, we need a clean break to the other side. This is the thing with trend lines, they can be a bit subjective. So what we're going to do is we're going to move them out a little bit. And again, like that is just not a breakout for me. So when we get a breakout, your first thing is we really want a breakout, not something that's like, oh, I'm not too sure. But yeah, we're going to move it out again. Just keep moving this out until it makes sense. So we can also be moving our counter trend line until price goes above that highest point. So now, okay, so we're getting like a slight breakout here. What is going to keep you safe is the concept of support and resistance as well. So let's have a look. Our last area really of support is down here. So if we get a breakout, it's not going to be a very big probability of a sell unless we start creating lower lows. So the fact that we're all the way up there and, the last low is down there, we're going to just keep staying in and just keep bringing this out. And then, now we're starting to obviously get the breakout to the upside, which is, now getting a little bit difficult because this could potentially, if you had taken a trade straight away, you'll buy here. Again, you are entering in an extension. So at this point of the breakout, this 1 day breakout, there is no high. So it depends on your risk tolerance. Is you're not always going to win. So you may have taken this and actually taken a loss, because your safety line is basically if price crosses back over the counter trend, which it did. So it crossed back over the counter trend, and when it's all close like this is very low risk, because means that you don't have to have a very big stop loss. um uh, yeah, I'm not too sure who's spamming. Um, but yes, so it's all dependent. This could have been a potential loss, but at the same time as well, like, these candles are like, that's a doji candle when it first originally broke out. Then we're not closing very strong. Um, for me, it's just a little bit about common sense and not being super aggressive with trend lines, because I feel like people who trade trend lines a lot of the time, they can just be like, oh, we've broken it, let's just jump in. um okay, good mention of other confluences of as more trend lines can give. Yes, exactly that. So we got to use the concepts of support and resistance. When we broke out here, we know, if yes, market structure is on our side, but ideally what we would want is a buy in this pullback, in this retracement, and then you would start to see that, prices just really like maybe consolidating. So, we're then just going to move this out a little bit more, going to move this up a tiny bit more, but that's probably now the highest that we can actually have this counter trend line. So, when it broke down here, my issue with taking a sell here is the fact that our safety line is all the way up here. So again, I'm not going to be wanting to take this trade just because it's broken out, because we're in the extension again of a potential down movement. So we want to wait for at least some type of pullback to happen, and then you would have obviously seen it would have just continued up. So we just keep moving it out like this. This trend line now becomes invalid because it's gone higher than the highest point of that bit. And again, it starts to break out here. If we use the concept of support and resistance, so guys, you'll be able to get a lot more trades on the lower time frames when you're trading something like, what we're trading right now, what we're looking at, sorry, is NQ. It's very, very bullish. Whereas if you use this strategy on maybe currency pairs, you're going to get a lot more up and down movement, which is probably quite good for trend lines. But if we're trading such a bullish market like the Nasdaq, gold, silver, that kind of thing, you're probably going to be wanting to trade more on the 4 hour or the 1 hour, because then you're actually going to get more trends rather than it literally just being bullish. But again, we break out of this upwards trend line, but we've got another confluence here. We need it to break this low, didn't break the low. We also don't even have a counter trend line at this point, so we've got no safety line. So then we're just going to have to sit it out and keep moving our trend line until we actually get something. So yeah, we've moved out like this. Again, we're kind of like getting these little funny movements, which, for me isn't really like a full-on breakout, because we've got to remember that it's very subjective. Okay, and then we finally got an actual break here. And again, the reason why I actually wouldn't even take this trade, so this candle here, when we broke through, yes, okay, we have potentially broken below some lows and we've got a really big push down, but there's still no counter trend line. There's still no safety line for me. So, the fact that it breaks down here, so it's again, we may have seen something really different on the 4 hour. So I'm going to actually just drop down to the 4 hour and see, because potentially the 4 hour or the 1 hour could have given us a bit of a move here. So yeah, it's a little bit tricky still, because even on the 4 hour, I can't really put a trend line there because there's no structure. So if we then look at the 1 hour, just hoping that, oh no, yeah, it would have been here, but there's a little bit more structure on the 1 hour. So yeah, like I said, like this market in particular, we're trading is such a bullish market that it's a very hard market to trade. If you want to trade more often, you're going to have to then trade on like the 1 hour. And trend lines for me, the lowest that I will go is the 1 hour. um do I consider fundamentals as part of your trading? So for me, I definitely pay attention to them because I'm a day trader and I'm kind of like in and out of my trades. Like, I'm always aware when things are going on, and I'm aware of potentially this could, push gold up or push the dollar down, whatever it is. But I don't necessarily use it to trade. I probably use it to not trade, in all honesty. um, Hey, Mon. False breakouts are stubborn. Exactly. You can see here on the daily, if you're going to try and take like a big um, breakout to the downside, because we've got such a strong bullish uptrend, we've got to really make sure that this market is moving down. But like I said, if you're doing it on the lower time frames, you're going to get a much better entry. You're going to get a much better entry, which is going to be a lot higher up, so then you can potentially get those smaller moves. So yeah, let's just say now we're looking at the 4 hour again. When we start breaking out over here, we still at this point, we break out, we still got no counter trend line, so there's nothing here that's going to keep me safe. So I'm going to have to just keep moving this out. And again, when we break through here, it's just something that I have to sit out, and this is what keeps me safe. Like I said, it could have been different. I could have actually entered if the 1 hour looked different, because if the 1 hour gave me structure and then we've got a 1 hour trend line, then when I've got something to be like, okay, I need to come out this trade because it's going against me. um but yeah, so we're just going to keep moving this out. I'm going to just keep showing until we actually can drop down to the 1 hour. um but yeah, so right here, I was going to say we could try and make it a little bit steeper. Could try and make this a little bit steeper. Yeah, I'd probably do it like this. You don't want to do it when they're like too close to each other, the fans, because you want a little bit of movement. Even this is like a little bit close, to be honest. But yeah, so okay, so now this here we could potentially take as a sell, because now we're starting to create a counter trend line. So now we break down, we break out of this trade. And again, understanding market structure, let's just wait, or have an alarm on this other trend line, because then we can enter this on the pullback. And then you see that really, really nice drop down, and you see how nicely these trend lines actually play out when you tick those three things. You got to ask yourself, is it a clear breakout? Have we broken out of support or resistance? And do we have a counter trend line to keep us safe? So a lot of the time, you're not actually going to get those things. So that's why I personally then would stay out, and why other people think trend lines don't work, because look how many we actually had to skip if we were actually trading off the daily. But yeah, obviously we on the lower time frames will be able to get some of these moves, because there'd still be really nice moves if you're a day trader. So we then break this, so around here when we're like breaking down again, this could hopefully you would have already been in the trade, But here would have been quite a risky place to take the trade because it's so far away from the trend line. So again, it's all dependent. If you've got a high risk tolerance, if you've got a big account, it all depends if you want to take a trade like that, or we want to wait for some type of pullback. But yeah, the next time it comes to the trend line, we obviously see that it breaks. So let's get rid of that, and then let's just start moving this out again. But I'm hoping that this is making sense to you guys now with the whole trend lines, and obviously how I actually do stay pretty safe within it. So this is how we're then just going to keep moving this trend line out. So again, when we are looking at a breakout, we need an actual candle closure outside. So just because its wick is outside doesn't mean we're now going to be looking at taking a breakout. So let's just move it to there. Okay, so now we've got this trend line, and as it broke, when we break above, so firstly we had this kind of like little fake out here. We literally broke out a little bit, but again, I wouldn't be entering because my trend line is so far away. My counter safety trend line is so far away, so just wait out and see what happens. Then it broke back in, so now we can bring it out a little bit. Then we get the break over here. Potentially we could have taken this trade, but it could have actually been a bit of a loss, because then we've got this counter trend line, and we break above this area of, well, actually we don't really break above it, because again, it is all subjective, guys, because the way that I do my support and resistance is that I don't go right on the candle bodies. I do just a bit above. So when I would have seen all of this stuff up here, I'd be like, well, that's just consolidation. Like, that's no clear point for me. So I wouldn't have even entered a buy there. So once we get more data, now we can bring this out again. But now obviously we're getting closer to this trend line. So really, is there any point in that trend line even being there now? Probably not. So, we just keep moving this trend line out. But obviously where it breaks out, it's just so far away from a safety line. Guess we could see, yeah, so we break out up there. You'd have to make sure that your stop loss is on the other side of this line. It's really far away. So for me, it's like, right, it's just not ideal, really. So then we just wait for more data. Then we see this happen. So then we get a break below here. We also know that our area of support is here. We broke below it, but we don't actually really have a safety line right now. So, we've got to pretend that we can't see any of this data here. It wouldn't be really until this candle prints, and then we've got this. It's very, very steep though. So, you could take a sell there. But again, if it just all depends on what your risk tolerance is, because like for me, this candle that's just breaks out like that with such a small, for me, I'm like, I feel like that's not really showing me that there's a load of strength in the buyers. So again, it's just all how you want to, well, actually, to be fair, that would be where your trend line is, because like I said, I like to use it on the top parts of the wicks. So yeah, when you're just about breaking out, our area of resistance is up here, it's not breaking out up there. So you could have stayed in this cell, move this out here, and then that's your new kind of safety line. And the way that I trade for my like risk to reward, like my sweet spot is like a 1 to 2 or a 1 to 3. Something that I've been like kind of testing with recently, and that's something that I want to do. I'm going to see how it goes, so I'll let you guys know. But when I hit 1 to 1, we go break even. when I hit 1 to 2, we just trail my stop loss to 1 to 1. Hit 1 to 3, trail it, because that way you're then really trying to maximize the amount that you're winning without with still being playing it safe. But it's that first initial step, because I either go for a 1 to 1 or a 1 to 2, because that's just what type of trader I am. So it kind of hurts, like when we nearly get we go break even at 1 to 1, and then we're nearly at 1 to 2, and then we don't, like, cash out, and then it comes all the way back down because we haven't then moved it to 1 to 1 yet. So it's just all about that tolerance and that mindset, and you've got to build that up. But yeah, hopefully that session on trend lines for you guys has been really helpful. I'm just going to start reading some of your messages now. Should a beginner or intermediate trade in this market condition? When only in one. To be honest, market conditions are always a bit crazy. Last year, technically, market conditions were crazy. Like, if it's not one thing, it's another thing. So there's no point like trying to wait for the perfect time. There is no perfect time to start trading. What risk do I do per trade? So between 0.5 and absolute max 1%, but my ideal is 0.5 or even below that, to be honest. Did you use false breakout for? And no, I don't use. I just wait it out. I don't really do supply and demand. The only areas of interest that I like to use is the highs and the lows of a session, and I basically just wait for those areas to be tapped into, see how it reacts, see if we break out. If we break out, we're gonna drop down on the lower time frames to get an entry to go in that direction. Obviously, if it rejects and closes back into the range, then we're looking for a reversal. Do news really impact your entry on this trend line? Not really. Not massively, no. But again, I use news as something to stay away from, especially because I trade with prop firms, because the majority of prop firms, you can't trade during news. So I've never used news as like a factor of like entries or exits. It's more of like, I know what's potentially going to happen, but let's trade the aftermath of it. Which time frame is preferred for structure confirmation? So I will do either the 1 hour or the 4 hour. If I'm purely trading market structure, I will only trade the 1 hour if it's the same as the 4 hour. But yeah, it's all dependent on how long you want to stay in a trade for. If you're trying to swing trade, if you're trying to day trade, yeah, like we need to. I feel like when you're making your plan, you have to really dig deep on everything. It can't just be surface level stuff. Um, as a day trader, I like my 1 to 2s. That's like my favorite. Uma, oh, what inspired me to start trading? You know what? Like when I got introduced to trading, it was so alien to me. Like never ever have I heard of it. Like it was, I don't know. Like I remember like thinking, oh my gosh, this is just such a minefield. But I like a challenge and I like things that are different. I really liked the fact that you could do this from anywhere in the world. And I think whenever I do things, like I'm always thinking of the bigger picture, and like I think about what I want for my life. And I've never wanted to be tied down to a place. I've always wanted to be able to travel and, just not have to answer to anyone. So I think that was more of the reason why I wanted to trade, because I was thinking of that bigger picture. Dory, as a woman in industry, what challenge have you faced? Okay, so being a woman in the industry is really, really hard because men are always competing with each other. It's very ego driven. Everyone's competing to be alpha. It's very hard not to fall into that and be watching what everyone else is doing. So that really affected my mindset, to be honest, because I was just always thinking I wasn't enough because I was comparing myself to another guy who was probably not even telling the truth anyway. And that's actually what I wanted to go through with you guys. and I really hope you take my lessons, my mistakes as lessons, because it's there's such big lessons. The last couple of months, I've been really, really struggling because I've been so fixated on becoming a swing trader, because I basically look up to someone in the industry who, within the last like year or so, transitioned to becoming a swing trader. But she didn't start off as a swing trader. She was very much a day trader. She was even a scalper, and I got very fixated on, you can only make money if you're a swing trader, and that's how I want to be. So I've been battling with myself, trying to force myself to be a swing trader, when actually that doesn't suit my circumstance, it doesn't suit my personality, it's just not where I'm at this moment in time. And I feel like so many people come into trading and they're so fixated on what works for someone else, and instead of really figuring out what actually works for them. So I've was started to go really backwards, but now I've kind of been like, you know what? Why do I not want to be a day trader? Because I love trading. It doesn't stress me out. Like, it doesn't, if I take a loss or if I'm in a trade, like, it doesn't stress me out. What was stressing me out was swing trading and thinking I could potentially miss my entry for the whole week. And where I do this full time, I was like, no, I can't do that. I can't. I was enforcing trades, and then I was being too forceful. So I've had to really just ground myself and go back to the beginning, ask myself all the right questions, of why I'm actually doing the things that I'm doing. Because if it's purely because, oh, so it looks good on someone else, or that person found success in it, it's not a good enough reason. You really have to make sure your plan is tailored to you and your circumstances, and only you know what those things are. So if you need cash flow, if you need money right now, being a swing trader is only going to make you feel more desperate. It's going to make you feel like you have to force things. You're going to, be, it's hard because you can't just sit and just wait, because you've got responsibilities, so um but then someone else who could be getting a full-time income from somewhere else, or they don't have bills to pay, like, they might suit swing trading, and day trading might be really stressful for them. So yeah, it's just a really big lesson. I would literally try to go from like scalper to swing trader, and it just didn't work for me. And I've now finally come out the other end of being like, I'm happy being a day trader. I really enjoy trading. So there's nothing wrong with just working and doing one step at a time. Um, oh, we've got quite a lot of questions, guys, but we're coming to the end of our session. So I want to do the giveaway so that um, you guys can get a free account. So I'm gonna just choose someone at random. If you're not here, then it will have to go to someone else. So thank you so much for tuning in, guys. I'm just gonna pick three people. First winner. Oh, Juliet. Juliet is our first winner. I'm pretty sure I saw you here. Um, Amazing. She's still here. Juliet, congratulations. Drop me a message on Instagram and we will get you your account issued. Oh, Trump's done a tweet today. um Okay, Juliet, you're still. Oh yes, yes, you're still here. You are our first winner. Congratulations. Our second winner, D unknown trader. D unknown trader. Congratulations. You have literally just commented, so I'm assuming you are still here. If yes, you are still, well, I'm hoping you're still here. If you can just drop me a message on Instagram, it's just Doey Trades. Let me just D unknown trader. D unknown trader. Congratulations. Did my message go through? Oh, error. Oh, it's gone through now. Perfect. Okay, cool. So Last winner of this week goes to nobody. That's his name or her name. Nobody. Are you still here? Nobody. Nobody. If you're not here, we're going to have to give it away to someone else. No worries. Congratulations to the 2 winners. Oh, there we go. There we are. Nobody is still here. Congratulations, guys. Thank you so much for tuning in and being patient with the technical difficulties this week. But I hope you guys have the most amazing weekend. Winners, if you can drop me a message on Instagram, it's just Doey Trades. If there's any fake accounts, the only account that I have is the one that has the blue tick. So yeah, just make sure you're messaging that one. But yeah, congratulations, guys. You got a free account. Thank you so much for all the support. Love doing this as usual. And I will see you guys next week. Have an amazing weekend, guys. Bye.